Ladies and gentlemen, good day and welcome to the Ajmera Realty and Infra India Limited Q3 FY 2022 earnings conference call. We have with us today Mr. Dhaval Ajmera, the Director of the company, and Mr. Nitin Bhavisi, the Chief Financial Officer. Please note all the participant lines will be in the listen-only mode, and once you ask questions, only after the presentation concludes. Should you need assistance during the conference call, please signal for an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Bhavisi, the Chief Financial Officer of Ajmera Realty and Infra India Limited. Thank you, and over to you, sir.
Thank you, madam. Good afternoon, everyone. We hope all of you and your loved ones are safe and in good health. I thank you for joining us today on the conference call of Ajmera Realty and Infra India Limited to discuss the company's results for the third quarter and 9 months ended 31st December 2021. Before we begin, I would like to state that some of the statements in today's discussion may be forward-looking in nature, reflecting our future outlook, and may involve certain risks and uncertainties the company may face. The investor presentation based on the financial results adopted by the board has been uploaded on the stock exchange website and can also be downloaded from the website of our company. I would like to now invite our director, Mr. Dhaval Ajmera, to begin the proceedings of this call. Over to Dhaval bhai.
Thank you, Nitin bhai. Good afternoon, and thank you everyone for taking time to join this call today. I hope everyone is safe, and fortunately for us and every one of us, this COVID has not been too severe, so which has been a good sign for the industry, for the market, and all of us. We've been seeing that and also that the vaccination drives have been going very progressively, which is also helping the business and the economy output to move in a positive direction. The economic recovery also seems to be gaining momentum, especially with the real estate sector, benefiting from the positive business outlooks. This shows that the resilience, how resilient the real estate sector being, especially in the residential segment. A positive outcome for this sector coming from the pandemic is that the population has not only started working from home, but they are also studying from home. But at the same time, we are also now seeing that a lot of people have again started working back to their office space and workspace. So it's becoming a mixed baggage, but obviously with work from home concept coming in, the demand for houses is increasing, and obviously larger space are coming more into demand. Obviously with finer quality of homes with their own private study space and etc. Larger homes along with facilities such as green space, walking trails, balconies, etc. And maintaining a healthy lifestyle is becoming a top priority and a greater demand for all the home buyers today. Home ownership is a well-maintained societies at better location has become important to Indian families. At the same time, we believe that to some extent the demand for compact homes would also be improving considering the nuclearization of larger families. Thus, we are very optimistic that the housing demand across all affordability segments is going to be very strong. The Omicron impact on the economy and the business operations was less severe, and we are optimistic that the impact of the third wave would be very minimal, and we are hopeful. The steady recovery together with benefits given to the real estate sector, such as one-time benefit of 50% concessions on the premiums which were to be paid by the real estate developers for their projects, given by MCGM and other government authorities, has given a big boost, in the real estate market, and we have seen a good spurge of inventory coming up, or the approvals taking place prior to 31st December 2021. Nevertheless, we were also not left behind, and we seized this opportunity, and we front-loaded the approvals of 4 of our projects, primarily one in Wadala, one at Greenfinity, second one in Juhu, and one at Sikova in Ghatkopar. All these which will lead to sharper revenue visibility. These savings will be beneficial because our approval costs have been incurred and paid, and reducing the burden of approval costs in future, ultimately improving our cash flows. by front loading all this, we have saved more than about 180 plus crores in these 4 projects itself. Since the last quarter of 2020, we are witnessing improvement in sales and registration also, especially in the new launches. Especially, steps taken by government of Maharashtra and Karnataka, like the stamp duty waivers and the discount in stamp duties and concessions in stamp duties have given a significant boost for the home buyers, and this has seen, great result in sales. Coming to MMR region, in the quarter 4 of 2020 itself accounted to 51% of the 2020 sales volume. The positive uptrend continued in 2021 as well. The reduction in premium by BMC was very well taken by real estate players. This totaled to more than about 11,000 plus crores of collection coming to the government before the end of December 2021. This move has also enhanced the viability of a lot of projects, and it has given a bigger boost to the real estate market. With 2021 becoming one of the best years for real estate since 2017, we have seen improvement in unit sales, and as per the latest CRE and the Collier's report which was published, we saw that total housing sales volume in MMR alone from Jan to August 2021 was an impressive of 1,33,000 crores, which was about usually being around 60,000 crores of the same period. So it is more than double sales volume what we have seen. The demand for luxury segment has also bounced back, and we have seen a significant demand in coming up, especially in the south and the central Mumbai. Coming to the budget of 2022, there's the positives for real estate, primarily one being the allocation of 48,000 crores towards the affordable housing scheme, 60,000 crores allotted towards Har Ghar Nal program. No increase in direct taxes has been looked as one of the positives. At least there was no incremental. But having said that, this has given a lot of the transparency and the digitization of land records in future is going to bring a lot of transparency in real estate, and this will be one of the greater positives in a long-term perspective. Also, 15% cap on surcharge on long-term capital gains will certainly aid to long-term sustainable growth of this sector. On the residential side, we are seeing formalization of the real estate sector. While we are witnessing the broadening of supplier ecosystem to some extent, the consolidation in the residential real estate market is set to go up further, with the market share of listed and more established developers expected to grow in the coming years. Specifically coming to MMR region, which is one of the most exciting real estate market, I would say, the real estate players here have two prone and important challenges to face. One, obviously, is the land-related constraints, land being very minimalistic in Mumbai and MMR region. So definitely the cost of land always is on a higher side. And secondly is the preference of established local players, who are always aware of the regional integrities of offering quality project homes at affordable prices. This is where Ajmera Realty has a clear advantage. We have been in the market for more than 50 years, and now we have been one of the clearly early creators of township in the region. With many real estate players making this market primarily a residential development-led market, we as Ajmeras have the advantage of owning in different suburbs of Mumbai approximately about 20 million square feet, for which the land acquisition has already been taken care, and this will allow us to keep on adding new projects to our portfolio. The project plans on these lands are already set in motion, with a robust launch of 7 projects measuring to about 3.2 million square feet in different locations of Mumbai, primarily Wadala, Ghatkopar, Juhu, some in central Mumbai and Pune. Over the next 15 months, gives us a combined estimated sales visibility of projects from these projects of about 4,400 crores. We have a clear launch visibility for the current quarter and for the next year. 4 out of these 7 projects, measuring about 1.3 million square feet, are to be launched in FY22 itself. These 3 projects are in Mumbai and 1 in Pune. The estimated sales value of these projects, 4 projects, are about 2,200 crores. We will now focus our energies on execution and deliveries of the same. We aim to scaling up our cash flows and cash flow generation and return to a greater extent with the help of these launches. On the acquisition front, we are very excited that we are going to launch 2 new projects in the coming future, measuring to about 900,000 square feet, and also doing a tie-up with a private equity fund for a financial closure at one of our projects. These will be announced soon once the deal are formalized, but just to give us a small flavor of the same. These would give us further boost towards our expanding our portfolio and launching our projects in a very aggressive and a faster way, thereby going towards our main aim of growing 5x in about 3 to 4 years from today. Wadala being our flagship area, our flagship project, where we started our first project in 1995, and we also developed the biggest 25-acre garden, private garden, handed over to the government, the world's largest dome theater being over there. We have seen that over the last few years, we have done sales of more than 2,000 crores, voluming to about 8 lakh square feet of carpet area in Wadala itself. I'm proud to say that during the pandemic time, we have recorded a sales of 625 crores from Wadala itself. That is from the period of April 2020 to September 21. We've already seen and delivered, flagship projects like Ajmera Aeon, Ajmera Xeon, and Ajmera Trion. As we see that, with this kind of development coming and the kind of location as Wadala enjoys, we are seeing a huge potential in Wadala, because probably this is the only location in Mumbai where it is connected through the freeway, through the Sivri Nhava Sheva link road, which connects to the new airport. There are 2 metro lines which are passing by. There is an existing monorail. It is connected to the BKC just in 10 minutes. Such is the infrastructure, viability and visibility already enhanced and already there. This gives a great boost to the entire suburb. And with this moving, we are seeing, and that is why we are very confident, which gives us more confidence, and that is why we are announcing another about 500,000 square feet of residential project which is coming in Wadala itself, which will give us to about 1,500 crores of top line. This is part of our 100-acre master layout at Ajmera Island. This will comprise about 540 residential flats of 2 and 3 BHKs, and we are highly in advanced stage, obviously with RERA registered already done, or primarily all the approvals are in place, and construction has already begun. As mentioned earlier, 50% concessions in approval cost has been availed. This is fairly de-risked the entire project, and we have got the entire approvals of the project in our hand right today. We are also very happy to announce that one of our acquisitions of a high-end residential project in the prime area of Juhu in Mumbai. With this will comprise to about top line to about 150 crores with 3 and 4 BHK apartments. And I am also very happy to say that the approvals for this project has also been taken, and we have already paid all the premiums, thereby taking the advantage of 31st December 2021. This project is acquiring and catering to high net worth individuals, and primarily being in the very, very high posh area of Juhu. This is already garnering a lot of interest from a lot of buyers within the locality, and we are very confident that this will be a good sellout, and we should be able to complete the project in the next 2 years' time. Ladies and gentlemen, in the coming quarters, we are very, very excited with the strong pipeline of our projects, with more than about 7 projects in the next 15 months, giving us a top line of about 4,400 plus crores. As a company, we are very optimistic about the real estate sector and poised to seize every opportunity to gain from unexpected cycle over the next few years. I now hand over the conference to Mr. Nitin Bhavisi, our CFO, to share the performance updates. Thank you.
Thank you, Mr. Dhaval. I would like to take you through the operational and financial performance numbers for the 9 months and the third quarter ended 31st December 2021. I begin with the operational performance first. In terms of our operational performance, we sold 216 units, sale value of around 310 crores over a volume of 256,000 square feet for the 9 months ending 31st December 21. Our collections stood at 301 crores. This is an improvement of 8% over YOY basis. The average realization have remained steady at 12,000 plus per square feet basis. In terms of our performance for the quarter, we have completed the quarter with a steady momentum in sales. We sold 77 units with a sale value of 108 crores, which is an increase of 19% on QOQ basis. The volume of area sold is 87,000 square feet, which is an improvement of 13% over the previous quarter. Our collections for the quarter stood at 83 crores, which is relatively lower due to the base effect. The average realization improved to 12,400 rupees per square feet, improving by about 5% on QOQ basis. In terms of financial performance, let me put some more light onto our credentials. Our revenue stood at 305 crores, which is around 12% higher on YOY basis. We have achieved good amount of traction in profitability metrics as well. EBITDA stood at 80 crores and has improved by 7% on a year-on-year basis. PBT stood at 42 crores and has improved by 70%, while PAT stood at 31 crore, which is improved by 77% on YOY basis. The EBITDA margin stands at 26%, PBT margin at 14%, and PAT margin at around 10%. Speaking on the quarter numbers, the revenue stands at 70 crore, EBITDA at 21 crore. Our PBT stands at 13 crore, which is an improvement of 24% on YOY basis, and PAT stands at 10 crore, which is an improvement of 23% on YOY basis. This has been impressive improvement in the margins, which is a positive traction. EBITDA margin stands at 30% and has improved by 408 basis points on YOY basis. The PBT margin stands at 18% and has improved by 994 basis points, while PAT margin at 14% and has improved by 738 basis points on YOY basis. It's my pleasure to mention that our PAT for 9 months, which is around 31 crore, has surpassed that of entire financial year 21, which was 30 crores last year. In the pursuit of our secured debt efficiency, which has always been the credentials over last few quarters, we have achieved financial closure of 300 crores, which is at sub 10% for codename Vadala, which is the next launch, positively impacting the overall cost of debt and bringing down the average cost of debt in our secured loan. The weighted average cost of debt as on 31st December stands at around 11.2%. Our project level debt has increased due to upfront loaded approval payments. We paid around 209 crore and our incremental debt over the last quarter has exactly been 200 crores. So which is the basic and the mood reason for increase in our debt. Our debt equity ratio stands at 1.3. The benefit of advanced approval payment, as mentioned by Mr. Ajmera, will accelerate the revenue recognition process, leading to sharper visibility. We have saved around 180 crore due to this particular one-time concession window available at Mumbai market. We have strong visibility of 871 crores from our existing portfolio, which is the ongoing project. Of course, the last quarter we added Greenfinity, which is the project which is become eligible for revenue recognition. That particular project is progressing well. From our advanced stage projects, we have a balance of sold inventory revenue, which is at 23 crore, and balance of unsold inventory revenue, which is at 121 crores. From our mid-stage projects, the balance of sold and unsold inventory revenue is 173 and 554 crores respectively. Coming to cash flow generation, which has always been a preference over the other performance metrics, we have balance receivables from existing projects. which is 232 crores as on December 31st. The estimated value of unsold inventory is around 675 crores. The estimated balance cost to complete is 520 crores and debt outstanding was 149 crores. The estimated net cash flow which is going to be generated out of this existing portfolio is 1040 crores. We'll continue to strengthen our balance sheet and improve the margin significantly as we move forward with our aggressive growth plans as narrated in the earlier section. On this note, I would like to conclude my remarks and would like to open the line for Q&A session. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Pankaj Tanna from Varun Investments. Please go ahead.
Good afternoon, sir. Wonderful results as usual. I just wanted to know, on page 17 of your presentation, you have mentioned Central Mumbai, mixed use 770,000 square feet. Is that, when you say Central Mumbai, you are referring to Wadala?
No, that is besides Wadala.
That is besides Wadala. Okay. Similarly, you are mentioning for the residents 642,000. That is also not Wadala.
No, that is not Wadala. These are two different suburbs in Central Mumbai.
Okay. So where would that be?
Well, we will reveal it at the time. We are just on the final stages of all the legalities and approvals. So once all is done, we shall definitely tell you.
Okay, great. And then on page 14, you have mentioned Greenfinity Bangalore. So you got a Greenfinity project in Bangalore also besides Bombay?
Greenfinity is the project which is at Wadala location. It is a Mumbai-based project, residential.
Mumbai?
Okay.
Yes.
No, because on your presentation you put Greenfinity Bangalore. So I was just wondering whether you got a Greenfinity at Bangalore also.
No. It is, as we have mentioned in the further slides, in the slide number 16 also, it is at Mumbai location and which
probably
is
it's a typo, but it is Mumbai.
Mumbai location.
Okay, so page 14 is Mumbai. Okay. And what is the status of the, demerger for that 1:49 were to issue them some shares for some demerger of 6-acre plot? What is the status on that?
Yeah, we completed the equity shareholders meeting and we are progressing. We filed the last level of regulatory process, which is the petition filing with NCLT. Due to only this current hearings being slow kind of a thing, so it will, we are expecting somewhere in middle of February to come on board, and the hearing, petition hearing should be happening kind of a thing. So we are progressing well with the regulatory process as that of the NCLT for the demerger.
Okay, so by next 2-3 will be done. What do you estimate?
Our sense, once it is coming on the board, it is plain vanilla demerger right from the main balance sheet of ARIL to wholly owned subsidiary. We don't see much of the challenge, and we should be completing in the sooner than later.
Okay, one last question is codename Wadala, that is on page 17. You mentioned codename Wadala, total estimated saleable area 806,000 square feet. That is in one tower or that is two towers?
Two towers.
Two towers. Okay. So both the permissions have been received?
Yeah, both the permissions have been received.
Okay, great. I think that covered. Sorry, I've taken too many questions, but these were the areas. Oh. And thanks very much.
Thank you.
Thank you. The next question is from the line of Amit Joshi from JP Securities. Please go ahead. Amit Joshi, your line is unmuted. Please go ahead with your question.
Yeah, hi. Am I audible?
Yeah.
Yeah, hi. Thank you so much for taking my question. And congratulations on good set of numbers.
Thank you.
So my first question pertains to Wadala and Kanjurmarg. So what is your detailed plan related to Wadala micro market, and any timelines as such you expect, to be cleared, if any? And if you could also mention anything regarding Kanjurmarg, it would help.
So Wadala, as we told you that we have already done sales in the last, when we started this phase of Ajmera Island, we've done sales of about 2,000 odd crores, and we've delivered Aeon, Xeon, Treon. Now we are starting with a new tower over there, and now potentially we have left with another 4 million square feet. And if we look at, if you look at our slide up where we have given the analysis of Wadala as a market, micro market, and if you see overall the consumption of Wadala micro market is roughly about 1 odd million square feet, if I have to say, historically data putting together. So we are seeing this being a very, very strong and very, very strong market, and it is one of the favored destination because of the as I told earlier regarding the infrastructure facilities available today. So we are quite confident that our project also has been very, very favored. People are really preferring to buy in our project. So we are fairly confident that next 5 to 7 years time we should be able to really capitalize the entire sales. And as regards Kanjurmarg is concerned, we are still evaluating, and there are certain final leg issues of legalities and approvals which we are finishing. So hopefully in the early next year or probably towards this year end, we should be able to bring up a complete clarity on the same. Even we are working towards that also, so that we shall be able to give you, but we just want to clear everything and then bring this land to the table.
Okay, sir. Yeah, that does answer my question. So, and we do have one commercial project coming up, if I'm not wrong. So,
yeah.
Going forward. Yeah, yes, exactly. So going forward, what will be the portfolio mix between residential and commercial, and also if there are any planned changes in that?
So we want to at least our aim is to have a good portfolio for commercial assets, because we primarily see a lot of potential in commercial coming in the near future, specifically for Mumbai as a city, with the kind of infrastructure which is coming all across Mumbai with metro connectivity, and Bombay primarily with connecting a lot with MMR. We see a huge potential for Mumbai, Mumbaikars and Mumbai as a city for it to develop the demand in commercial market. So we are, with the advantage to us is that with the kind of land bank available with us and with the kind of opportunities available, we are looking at earmarking at least 3 to 4 million or at least 4 to 5 million square feet of commercial assets from our existing land bank. So if I have to put in percentage terms, it will be about 20-25% minimum. And primarily Bombay is where we are targeting.
Okay.
Just to add on to that, at Wadala location, this earlier question which we responded through demerger, we are bringing the land parcel into wholly owned subsidiary. There we will be having the exclusive 3 million square feet of sellable area, which is going to be for the commercial development as such.
Okay, sir, that helps. And just one last question, if I can squeeze on. Sir, I wanted to know where are we on the London projects after the last quarter update?
London projects are almost towards the completion end, and we are hopeful to capitalize revenues probably by by next quarter or early first quarter of 2022-23. So we in terms of our projects, there are 4 projects which are going on. 2 have been 100% completed, 2 are about 50% completed. So we are looking at capitalizing the revenues coming from there in the tune of roughly about 70 to 80 crores. in the next 2 quarters.
Okay, sir. That does answer my question, sir. Thank you so much, and good luck for your next quarter. Thank you.
Thank you. The next question is from the line of Jeevan Padma from Candy Floss Advisors. Please go ahead.
Thanks a lot. So congratulations, Dhaval bhai, for a very good set of numbers and as well as the project pipeline. I am very happy with the project pipeline that you have created in the launch. My question is, we have said that we are going to do 40 to 100 crores from this project pipeline. Can I know this revenue can be achieved? Is it like 3 years, 4 years, 5 years?
So let me address in 2 parts. We have 1.3 million square feet, which is the project which are in absolutely in the launchable stage now. One being the Wadala, which we have briefed and discussed about it, and couple of other projects which totaling 4 projects kind of a thing, and which is having the revenue potential about 2200 crores. And another 3 projects which is the launch plans of FY23, which is also going to generate around 2200 crores. So that's both the pipeline of about 7 projects is going to aggregate to 4400 crores of top line and the sales revenue coming in at least in next 3 to 4 years kind of a thing.
Okay, so you are basically saying next 4 years we should be able to complete the project, sell the complete project. That's what you're saying?
Yes. So basically what we see is there is a strong, we are seeing a good uptake of residential sales coming in all our projects and also the launches which we have done from last year onwards. So, this gives us the confidence and, the project approvals are also fairly advanced thanks to this 50% concession happening. We've front-loaded and, taken all the approvals for like 4 of our projects. So which makes the project clarity, complete clarity on the project, and it gives a definite timeline. So that's why we are seeing a clear visibility of revenues from these projects totaling to about 4,500 crores coming in the next 3 to 4 years time.
Perfect, Dhaval. And second question is, so by when you think our fund, that is the cash flow from the overseas projects to come to the company? So it includes London as well as the Middle East.
Yeah. So as I said, the London projects for cash flow should come by this quarter, the coming quarter and the next quarter. As far as the Middle East, the Bahrain project is concerned, we are hopeful to get this by 2023.
Okay, so how much would be Bahrain project cash flow?
So Bahrain, we already have received, we sold this particular project somewhere in last year, and we received the down payment. Then after we have the inventory entitlement of about 10,268 square meters, out of which the cash flows is likely to come as and when the progress of the sales happening from that particular thing. We expect that that particular repatriation should be over 2 to 3 years as we move forward with the execution and as well getting the inventory sold out kind of a thing.
So overall, we are expecting around, about 80 odd crores as the, correct?
80 crore is our investment, and over the sale of this particular inventory kind of a thing, we should be getting incremental over and above the down payment which we received at the time of deal. It should be another 110, 120 crore kind of a thing. So in that case, we should be having the repatriation of this largest and significant cash flow over the gradual manner over 2 and 3 years, please.
Okay. So basically from UK project we are going to get 70 crores in next 2 quarters, and from Bahrain project we are going to get 110 crores in next 2 to 3 years. Is that correct?
Yeah. Yes.
Okay. Why you think that Bahrain project will take 2 to 3 years to liquidate the inventory?
So Bahrain project primarily is a ready to move in market where we see that the asset is over there is primarily sold when it is ready, as well as it is primarily the lease market. So any investor who is going to buy, and we are going to get our share basis the ready stock. So that is where we see our actual valuation of the stock coming in. And so right now the project is fairly finished, where the RCC work is almost 80% complete, and by 2023 we are seeing the project being completed, and then we are hoping that towards the end of 2023 we should be started to getting sales advancement coming from our stock.
Okay. Perfect. Thank you, Dhaval.
Thank you.
Thank you. The next question is from the line of Bhagat Aryan from Fort Capital. Please go ahead.
Yeah, hello, good evening, and congratulations on a great set of numbers for this quarter. And just to mention this, this quarter's investor presentation has been done extremely well as compared to the previous ones. It has been much more clearer on all fronts, and it has been very easy to understand. So I just have a couple of questions. One is on page 7 of your presentation. You have mentioned collections have reduced as compared to before. Can you please just elaborate the reasons for this?
So as we have compared the collections with that of the the Q3 of FY21, which was the time when the the pandemic relaxation just started, and as well at that point in time the stamp duty concessions were also around kind of a thing, and luckily we had a very good ready to move in inventory, and we had a huge sale coming from that particular ready to move in inventory, and that too at a Vadala location kind of a thing. So as we have mentioned about the base effect, which was pretty high on that particular comparative period last year, we have the steady collection which is 83 crores in this particular Q3 FY22.
Okay, that explains it. So also, can you give us a color or more like an update on the private equity tie-up?
So private equity deal is very much, the documentation and, it is actually the structure of the deal is that of acquisition cum financing kind of a thing. And we are, almost on the last stage of the completion of that and consummation of that deal. We should be announcing very, very soon.
Okay. So one more last question. You have mentioned that about the 5x growth plan. 5 times growth plan. How would we be, what would be the plans or your direction for the same? And what is the time in which you are targeting to achieve this?
So as we, if you see, internally as a company, we have decided to have a 5x growth plan over the next 3 to 5 years time. And if I have to look at our project pipelines which we have announced and which we are going to make, where we are already showing that today our top line of, if I have to look at last year's top line, it was around in the range of 350 odd crores. And, with the way our projects are panning up, we have around 4,500 crores of project coming up over the next 3 to 4 years time. And over and above that, we are also constantly looking at new acquisitions and new tie-ups. So as we said that, just to mention our Juhu project, which we got recently acquired, a new project launch at Vadala. So all these are just panning up to our growth strategy. And plus, beyond this also we have about 850 crores coming from our existing, projects which are currently going on in Bombay, Pune, Bangalore, etc. So put together is about 5,000 plus crores. So, 5,200 plus crores is what our top line is, what is visible to us very clearly in the next 3 to 4 years time. So average, if I have to do over 4 years, 3.5, 4 years, is roughly about 1,200 crores. So panning to 350 crores versus a 1,200 crore average, this shows our growth automatically to 4x, 5x from where we are today. So that's the growth plan. Plus, over and above this is new acquisitions, which we aim to at least do 2 to 3 every year.
Yeah, so we believe that we are in line with the growth targets, right?
Absolutely. With the current projects only, we are in line with our growth strategy, but we intend to grow even more bigger than what we planned. So definitely we are moving towards that.
And just to add on to this, this 4,400 crore worth of the top line and the revenue potential is completely on the lands which is we are owning, and we have the fully paid land in our balance sheet. And as Dhaval Bhai mentioned that aggressive growth plans about the further asset light acquisitions through JV, JD and DM models, which is also another strategy to complement to the already development potential out of our own land kind of a thing. So this is a complementary strategy to bring the next phases of our own land, and as well to acquire asset light and low investment acquisitions, and to put together should fuel my growth, which is my aim of 5x growth from here on the base of 350 crore.
Okay, sure, definitely. That explains it. Thank you for taking my question.
Thank you. The next question is from the line of Faisal Amba from HG Hawa and Company. Please go ahead.
So, sir, what is it that we will do now very differently to really drive sales? Because everybody is now open to the opportunity of real estate sales rising, and there are so many developers coming up with new projects and stuff. And so, what will it be that we will do differently to drive our sales?
Sorry, I'm not very clear with your question. You're not very audible.
So, what is it that we will do differently to drive our sales going forward? Because now almost everybody is aware of the turnaround in the real estate sector, and they are gearing up accordingly.
So primarily, what we've observed in real estate is that the person who has been in the market for a longer period, who has delivered, who has been in this space and given deliveries is a very, very big, holds a very big advantage, of course, and these all puts together as a brand. So if I look at Ajmera as a company, we are listed players, so transparency beyond RERA also comes into a bigger picture. B, we have been here since last 53 years, delivered to more than about 3 crore square feet and handed over. So our deliveries have always been on time and almost towards our deadlines what we have matched. And thirdly, with this kind of sales and with this kind of it gives us an advantage as a brand for people's preference. So just as a live example, if I have to say, during the pandemic, when our projects were there, and during our peak times, we have seen sales happening in our project versus probably in and around other places. So this gives us an advantage as a brand to ensure that our capitalization of sales and value of sales comes at the right value. And obviously, with all these, long-term tenure coming, we also have a great and easy access to capital. So which was very visible for one of our projects, the one which we are doing, where we have taken as a sub 10%. So while we put across, when we have a lower cost base, we're trying to ensure we have the best of the cost, which gives us the best of the margin, and also sustains us to not really look at a very big price increase, but give a healthy margin.
And the second question is, are we applying technology tools like PropTech, etc., to really drive up sales, speed up approvals? That's one. And do you have any data as to how many under 35 years people are buying our flats? And are you seeing any efforts from the company to make the brand more contemporary?
So to answer your question, definitely, technology is where we always keep evolving ourselves within our company, be it for construction, be it for marketing, be it for sales, be it for our operations, everything. So we have a full-fledged, customized ERP system where our entire operations take place within our administration. Within the technology front for construction, we always evolve and get into new technologies which helps us bring a better quality product with a faster construction. And thirdly, we have an entire dedicated online marketing team which looks at the exact micro market and does the marketing and sales accordingly. Today we are seeing about 30-40% plus of our sales coming from online as compared to physical, if I have to say. So definitely we are ever evolving. To answer your question of 35 and under, well, it depends on the project and the area. But if I have to average, say, definitely, if I have to look at my bracket for sales or the buyer would be 35 to 45, and primarily this would be about 60% plus in overall scheme of things, be it Vadala, Pune, Bangalore, wherever. So that's the range where the range of age where the buyers are today.
And sir, ours is also a very large promoter family. So is the balance of power, succession issues really fully addressed at this stage?
Yeah, absolutely. If you have to see today, we are a 53-year-old company with 3 generations of people together. It got been kind. We all have set responsibilities, set rules, and that's how we operate and that's how we work. So we've been together on this from last 53 years, and we intend and survive to be forever. So that's how we've been working. And obviously, with all the promoter-driven, we have these professionals at each and every vertical sector of the organization, be it purchase, be it sales, be it finance. Those are where all engineering, everywhere we have the professional who micromanages or who does the entire day-to-day operation. So it's a mix of professional and a family-run business together, which we ensure that it is more transparently driven and not a family-driven company.
Thank you a lot for answering the question so well.
Thank you.
Thank you. The next question is from the line of Aman Vij from Astute Investment Management. Please go ahead.
Good afternoon, sir. My question is on the codename Wadala project. So if you can talk about some timelines in terms of which quarter or month are we planning to launch it, as well as what kind of sales are we expecting from the first year, sales and collections?
Well, we are planning to launch this as early as this month as a pre-launch, and officially launch of this project would sometime be coming in the quarter of April 2022. So we are expecting, as per our survey done and as per our just an informal survey before we launch, and speaking to a lot of channel partners and broker network and our existing clients, we are expecting a positive and a healthy response to this. The results of which should be out very soon, by the end of the quarter, or probably next result when we meet. We should be able to pan and give you exact numbers, but we are quite positive about the sales over there.
And so say if we launch in April 2022, so how long do you think it will take us to sell the whole inventory, because this is a big number?
So we are expecting at least about 60% sales to happen in the next 2 years' time. And overall life cycle of the project, we are seeing 3.5 years. So balance 40% should happen in the balance 1.5 years time. So our entire target is that to have 60 to 65% sales happening in the next 2 years.
And just to add on to that, this particular Wadala project, where we have paid this 50% under the 50% concession, so good amount of the cost has already been incurred and paid upfront. And we are seeing that, due to this upfront loaded approval cost paid, we are seeing the revenue recognition eligibility will be much faster than the normal course of the project when it becomes eligible and matured for the revenue recognition. So this particular special situation is going to be added advantage in the codename Wadala project.
So we think, say, in FY23 itself, we can recognize a good chunk of revenue.
That's our very much expectation. You are bang onto that.
Sure, sir. And I just wanted to understand the demand side. So our previous projects, Eon, Xeon, and Trion, it took much more time. So what gives us confidence to able to sell this big project in, say, 3.5 to 4 years?
So I'll tell you, Aeon, Xeon, Trion was in a particular cycle of real estate where there were a lot of uncertainties and a lot of new eras coming within the business in terms of RERA, GST, demonetization, etc., which actually deferred, or probably I would say made the transaction a little later as compared to normally what would have happened. But post-pandemic, what we are seeing, we are seeing a good surge of demand in real estate, and people's conversion time to buy has become very shortened, or less as compared to what it was earlier. And as I mentioned in my speech earlier, that we have done about 625 crores of sales during April 2020 to September 21. So that gave us the confidence that this is now the market which is looking at one of the micro market which is looking very strong, and that's how we managed, and we feel confident that we will be able to achieve these numbers of sales, because eventually we have a long list of sales to happen for our next projects too in Wadala. So definitely this will give us a great momentum for it.
Yeah, just to add on to that particular confidence index, we have, as I mentioned, that we have paid the approval cost upfront, about 160 crore for this particular project, and we have already have the financial closure done for this particular project, which is at a very, very competitive and economical rate of interest, which is sub 10% for 300 crores. So we have the balance of the credit line available to pump in and put a good amount of momentum onto the project execution, and something which is very well executed gets sold out. That's the mantra of the Mumbai market kind of a thing. So we are pretty confident of achieving our sales number in a great velocity.
Sure, sir. My final question is on the Central Mumbai launches and the approval. So, sir, so you have talked about we should be getting the approval soon, but then it will take some time to launch also. So, what is our target as of now in terms of launches for both the big projects, mixed use as well as residential?
So one of the projects we hope to launch by between the quarter of April to June, July, and the other project should be towards the last quarter of 23.
Anyway, this is both the projects is the plans of FY23 launch, and we are almost on the track to maintain that particular launch estimate as we speak now.
And the sales amount you have not mentioned, approximately what realizations are we expecting in this, say, 7 lakh and 6.5 lakh square feet?
The entire 2 million square feet of this FY23 launch, we have given the guidance of about 2,200 crores is going to be the sales potential out of these 3 projects of 1.9 million square feet, 2 million square feet precisely. So that is the 2,200 is the sales potential.
Yeah. So that was the confusion part, because Central Mumbai realization should be higher than the Wadala. So why is the sales potential not more?
No. This is the Central Mumbai. When we say the central, not like South Mumbai. This is the central suburbs of Mumbai. So it is low. The realization is going to be lower than Wadala. Like the sales realization value wise per square.
Okay, that makes sense. Okay, thank you.
Thank you. The next question is from the line of Divya Salian from Moneylife. Please go ahead.
Congratulations and good evening. So I have some questions. It's good that you have given project-wise sales and collection data. Can you also share the cash flow or the surplus to be received from each project?
So as we have given the, in our press release and other disclosures, the existing portfolio of this particular project, which is advanced stage in the mid-stage project, net we should be having the 240 crore, as I mentioned in my opening commentary. That is the cash flow generation post that we are expecting. And as we move forward, this is going to be the numbers panning out on the launches of FY22, where we have 2,200 crores of the top line sales revenue potential. And in FY23 also we have launches of 3 projects which has the sales potential of another 2,200 crores.
Okay. Can you give region-wise breakup of construction cost and realization?
So, if I have to say Mumbai per se, the construction cost is, on the constructed area, which is usually 1:2. So if I have, let's say, 1 square feet to sell, I have to make 2 square feet to develop it in terms of my other amenities and parking, etc., etc. which should be in the range, purely construction should be in the range of around 4,000 plus per square feet. If I have to say Bangalore, which should be in the range of about 2,800 to 3,200 per square feet. And if I have to say Pune, it will also be in the range of 2,800 to 3,300.
Okay. And also, I have a question on debt reduction. So, how much of the debt reduction and what is the targeted cost of debt?
See, as we have been giving our guidance on the debt reduction till last quarter, this particular quarter we have the incremental debt which is about 200 crore which is added to, which is purely on the basis of the approval cost, which is the one-time 50% concession which we had to pay, and we could have the paid off out of the exactly 200 crore incremental debt kind of a thing. Or otherwise, operating cash is from the internal accruals kind of a thing. And going forward, as we move on with the aggressive launch pipeline of projects, definitely at a project level there would be incremental debt. But on the overall trajectory, given the generation of the cash flows from the existing project and the new pipelines of the launches, we should be having the trajectory of downward reduction into this existing debt which we have. Currently, we are at 1.3x of the net worth.
Okay, that answers my questions. Thank you, and all the best.
Thank you. The next question is from the line of Ankita Mehta from NRC Capital. Please go ahead.
Thank you so much for giving me the opportunity. So I just wanted to check with you, given that you also mentioned this in your opening remarks. I just wanted to check with you on the third wave and how has it impacted us, and like in terms of operations as well as the financial performance.
So COVID, as we said, in terms of really the financial operations, COVID overall impacted. It gave a positive impact to the real estate market, and that, as I said earlier, gave us a good sales in our prime projects, and especially Wadala, which I said about 600 plus crores of sales happening during the COVID period. So overall, if I have to say, in terms of business-wise, sales-wise, COVID did not have a major impact on us. Obviously, during the first wave, there was a lot of confusion and chaos, which eventually settled down in terms of construction and whatever things needed to be done. But while during the second wave, the 2 months were very severe, and it did not have too much. It did give us a little slowdown in terms of our sales and construction phases. But I think thereafter things are moving pretty smooth, and we are not seeing too much of an impact in construction and development.
All right, sir. And also another question I wanted to check with you was on margins. So how are we seeing margins moving from here, and like what is the range that we are targeting at?
So as regards the last quarter, which we have seen the expansion in EBITDA and as well the PBT and PAT margin, which is significant over the 9 months that of the FY21 kind of a thing. And going forward, as we have this savings coming from our debt reduction, which has done over last about 12 to 15 months, 50% concession of the approval cost which we have paid, and such kind of a savings should enhance our margins going forward, and well execution of the projects in time should also enhance the further margins onto the projects kind of a thing. And just to mention on a sequential quarter basis kind of a thing, on the quarter 2 of FY22 to quarter 3 of FY22, we have the better price realization on the per square feet basis, about 5% incremental one, which is giving us a good confidence about the margin further traction going forward kind of.
All right. And so what would be the strategy related to pricing going forward?
So prices going forward will be very depending on project to project, but definitely we are looking at aggressive numbers and aggressive sales. So we are not going to hold on to our prices. We will definitely be at par or little better than the market to ensure that we have a constant sales coming forward. And as and when the product is getting delivered, we will be doing some bit here and there changes. But overall the strategy is to keep on selling to have a numbers, healthy numbers.
All right, sir. That was really helpful. That was all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Pankaj Tanna from Varun Investments. Please go ahead.
Yeah, a continuation. You mentioned the cost being roughly 4 to 4,500 for Mumbai. So let's say on your page 14, you mentioned Zion having a realization of 17,600. So less 4,000. So your gross, your net, other expenses aside, you would have a revenue of about 13,000 rupees a square foot net?
No. As I said, this is purely 4,000 is on the constructed area, which is 1:2. So primarily my construction cost becomes 6,000 to 7,000 rupees on my sale portion. Point number one. Point number two, there is also premium costs which have to be added onto this, which we have, which you usually pay, which is in the range of 2,000 to 3,000 rupees. Plus there is interest and admin and other costs. So that's how the entire breakup.
No, I get it, but what I'm just saying is that basically, so you would probably put it at as 4,000 rupees is the realization, is your cost, and probably your multiplying factor would be about 1.6, because if you put a 2 factor for Bangalore, you will get 0 receipts.
Yeah.
Because you say you are getting at Ahmedabad and Bangalore, you are getting 4,000 and 4,900. So if you put a multiplication factor of 2, you would be getting net receipts of 0. So which is not possible. So 1.5 would probably be a better factor to multiply your 4,000 rupees by.
No. As I said, for Bombay specifically, because we have shortage of land and there are rules, regulation, your construction cost is higher in Bombay because your development to construction cost, the ratio is 1.5 to 1.6x. Whereas in Bangalore and Pune, that's not the case. So what I mentioned of 2,500 to 3,000 is purely the construction cost. So if my sale price is 5,000 rupees hypothetically in Bangalore, my cost of construction is 3,200, and then I have to add the land cost and balance is the margin.
Okay, good. Okay, and as you will see that, your profitability is directly linked to the amount of interest that you eventually pay. I would believe trying to reduce your loans would probably be the most profitable way to make money.
Yeah, absolutely. So if you see in our last quarters, we have done about 230 odd crores of reduction of our debt. However, it is based on every project to project, and when we have to pay premiums within Bombay market or wherever, so we have to take working capital requirement. So that's where it keeps on adding and reducing. But overall, our aim is to ensure that we reduce our debt to a massive extent.
Okay. So eventually, when you're developing, you're effectively selling your property, but you're selling it not as a raw land. You're giving a value-added land. So won't it be better to keep a more aggressive pricing and get more sales for the next 2-3 years to consolidate and have a very strong balance sheet?
So as I said, only by reducing prices, it's not necessary that we can do sales. So let's say if I'm today at Wadala selling at 27,000 or 28,000, if I made it 20,000, it's not necessary that I'll get great numbers. So we have to balance it out to make sure that, the prices are right and people have the acceptability of the price and the numbers work accordingly. So that's how we are managing. As I said, I'm not going to where the prices are 28 or 27,000 and make it 33 to get a brand premium. I may do it for the last 10% of my sales value or, for my project or whatever. But overall, I want to ensure that we are at par with the market to ensure our numbers coming up great, because we have a strong pipeline of our projects coming and we want to have a healthy balance sheet going forward over the next 4 to 5 years.
Great. I mean, I think you've been very clear about how you want to progress. And one last question, I'll just add: why is there so much fluctuation in your share price? I incidentally own a lot of your shares, but it's wonderful to own them, but it also gives us a lot of heart attacks. Last week it was 480, today it is 395. So what is it? I mean, as what do you see? I'm not asking for numbers, but if you today talk about 90 acres in Mumbai proper, and the way, let's say, it's on 6 acres that you are developing at Wadala, you're going to get a gross receipt of about 1,100 or 900 crores. So we are talking about 130 crores an acre for your land. Of course, value-added sales. So at 80 acres, you should be about 10,000 crores. So why is your market cap only 11 or 1,200 crores?
Sir, only for a change, I would like to take the position of asking the question rather than responding. So this is going to exactly my question to you, sir, to guide us that why there is a fluctuation.
No, but that's not in our hands, as you rightly said.
As an investor, I'm always little worried when I see a 100 rupee note on the ground. Why is it being sold at 10 rupees? So that gets me worried.
Well, I think we have been coming to the market. People are looking at our results. I think the time will come where right valuations will start being looked upon and coming into play. So we just have to wait, and we have to keep on doing our work, and I'm sure the market will respond better to us.
Okay. No, because as somebody who's investing, one always likes to hold on to a share which is rising. So anyway, thanks a lot.
Thank you.
Thank you. The next question is from the line of Monica Arora from Share Giants Investments. Please go ahead. Monica Arora, your line is unmuted. Please go ahead with your question.
Yeah, thank you for giving me the opportunity. So I just go through the results and all. So I did not see any credit rating. Do you have a credit rating?
Currently, we do not have, because the kind of lines which we have from the existing lenders is that of they have their internal due diligence and their internal credit assessment on our account kind of a thing. Going forward, as we move forward, we may have the instrument of the listed NCD and something of that. Definitely, we will get the regulatory required credit rating, and we should be disclosing those ones as per the transaction needs.
Okay. And sir, do you think that ESG is important for us, and any ESG related activity or initiative you have undertaken?
Yes, sure. So we have been very mindful, and already ESG being the very ongoing factor for us. So whether it is environmental at a site level, we are mindful about using the raw material which is environmental friendly and giving us value added about that particular initiatives kind of a thing. At social, definitely we have been doing under the CSR initiatives kind of a thing, helping the society on malnutrition and malnourished children at tribal region kind of a thing. We have some tie-ups with local trust and the NGOs operating there, and we are contributing to that particular social cause. We have another program which is where we are contributing about the water management program at Banaskantha in Gujarat. We are supporting to the medical and education needs, because we believe that medical is the need of the hour when somebody needs that particular, and education is definitely forward looking, that it will bring up the entire family through this next generation education kind of a thing. So these are the social activities, and on the governance side, definitely we are supporting the entire governance practices. We are also taking the better GBPs, global best practices, to move forward on a better disclosure, as we been complimented on this investor presentation, giving all the disclosures and all the numbers and all that kind of a thing. These are the initiatives, and we will keep doing the further improvisation from here on.
Thank you, sir, for your detailed inputs on the same. I have one last question, if I can squeeze in. So we see that we have a huge potential land bank, which is not yet announced, like announced in the sense of any specific project or how we'll be developing it is not yet announced. So can you give some additional timelines? I'm not asking about very static plans that tell me your plans, but just a rough timeline that what are you thinking about these land banks? How you're going to develop them in future?
So primarily all these lands, as we said, which is being owned, we will bring up on the surface when the actual right time comes. But if I have to look at the overall scheme of things, I think in the next 4 to 7 years, I mean on a very higher side, what I feel we will have most of these being announced and already up on the project to develop. And at the same time, we'll also be parallelly executing new projects, new tie-ups, new developments with probably JV-JDA models or something like that, which will keep our cycle rolling for acquisitions.
Thank you, sir. I appreciate.
Thank you. The next question is from the line of Shashank from Value Educator. Please go ahead.
Yeah, thank you for the opportunity. So my question is on the similar lines. So we have launched about 2,200 crores of the projects in this financial year, and we have a plan of about 2 million square feet development launches in FY23. So for FY24, the plan will be the similar. Can you give some guidance on FY24 if possible?
So as regards FY22, as we have showcased that, for 4 of the projects, both the projects like codenamed Vadala and Juhu project, we have paid our approvals, and for codenamed Vadala, we have got the RERA registration also. We have the complete visibility of the launches going to happen in this particular Q4 of FY22 kind of a thing. And as well as regards the 1.9 million or 2 million square feet to launch in FY23 also, we are on track, and we should be, announcing the project launches as we have the visibility and move forward.
So from this about 1.9 to 2 million launches which we are planning, the revenue potential would be again 2,200 crores. Any number on that one?
The revenue potential is 2,200 crores, and revenue recognition process is always based on the execution life cycle of the project. So as per the cost incurred versus the budgeted cost kind of a thing will determine the percentage of completion, and revenue will be recognized accordingly kind of a thing. Our guidance is that of this particular project should be getting completed within the period of about 3 to 4 years, and that's where the revenue will be captured in the income statements of the respective financial years.
Right. My second question is on the Juhu redevelopment project. So in future also, are we planning some more projects on a redevelopment side?
Yeah, as we said, we are opportunistic based. Wherever and whatever we feel is the right for our company and giving us a better valuation and a good margin, we will be up for grabs. So definitely we are looking at projects, and while we speak, we are already in discussions with a few. Hope to materialize soon and announce soon.
Yeah, and on this project, you have mentioned that revenue potential is about 150 crores. So what will be our cost, if you can give some details on
the range of 110 to 115 crores.
Okay. And my last question is on the margins front. So initially you have mentioned that the Greenfinity project is having about 50% kind of a EBITDA. So incrementally our EBITDA margins from the codename Vadala, which we launched in this year, and upcoming projects, so incrementally our EBITDA margins will be better from here on?
In terms of, rather than EBITDA margin, I can guide you on the project level margin, which is, the codename Vadala, we should be expecting in the range of, 35% plus kind of a thing. And for Greenfinity, we always have, better margin because of, it is a self-funded project kind of a thing.
Thank you very much, and all the best.
Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, I now hand the conference over to Mr. Nitin Bavisi for his closing comments. Over to you, sir.
Thank you. Thank you very much. Hope everyone stays safe. and we look forward to meeting you and hearing you soon for our next results. Till then, take care, and thank you very much once again.
Thank you, everybody.
Thank you. Thank you, members of the management. Ladies and gentlemen, on behalf of Ajmera Realty and Infra India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect.